Predictions in the crypto market are all over the place. Some people say Bitcoin will hit 100 million in a few years. Others say it will go to zero. There's a lot of dissent, but what's actually realistic? In this video, we're going to talk about realistic price predictions. How can we best approximate Bitcoin's growth rate? There are many different ways to approach this question. Some of those approaches have very hard assumptions. Others seem to be a bit more practical. Let's start off with the stablecoin growth, because the creation and the destruction of stablecoins is a direct reflection of how much money is currently flowing into the crypto space and out of the crypto space. Whenever you're sending your hard-earned fiat currency to a centralized exchange, that centralized exchange might send this over to a stablecoin custodian, and the stablecoin custodian will mint new tokens. That's what we see when here the stablecoin market cap is going up. Whenever you're withdrawing all of your funds and you don't want to hear about crypto anymore and you want to get your money back, you're getting back into traditional finance, it lands in your bank account, then stablecoins get burnt, then this is going down. Now, why is this chart so useful? It's great because it has very little volatility, and it's also useful because it seems to approximate Bitcoin's growth rate. Because have a look at this. Since October of 2023, we are expanding. And when we compare the stablecoin growth rate with the growth rate of Bitcoin, they are quite comparable. There might be a slight outperformance of Bitcoin's growth rate. We can't necessarily say because there is quite a bit of volatility in Bitcoin's price. But in general, if the stablecoin market cap is going up, we should expect Bitcoin's price in the medium term to also go up at the same rate. Now, in the last 2 years, the stablecoin market cap went up by 140%. If we annualize this, we get to 55% per year. If we just isolate the last year, we have a very similar value, 53%. So it seems like the Bitcoin price tends to go up by a bit over 50%, given that we don't see any kind of implosion in the market, right? If we don't have Terra Luna, if we don't have FTX, then on average crypto prices should appreciate by roughly 50%. But this is our first big assumption in this approach, right? If nothing implodes. But unfortunately, things do implode every now and then, because that's the big problem, right? We can't say something appreciates super quickly, assuming there is no bear market, assuming there is no FTX, there is no Mt. Gox, there is no Silk Road, there is no ICO bubble burst. Of course, those things do happen. And so 55 to 52% per annum is the absolute tip-top growth rate medium term. But what's realistic? Let's approach the question from the other direction. What's the minimum growth rate we can expect? Now, there is the monetary debasement. USM2 grows constantly. The US money supply goes up by 6.8% per annum. So it's 77x'd over the course of 66 years, and that growth rate is quite constant. This is now the US2 money supply on a logarithmic scale. And many investments appreciate by rates that are comparable to those 6.8%. For example, have a look at the S&P 500 relative to the money supply. It's also a very long-term chart that starts in 1959. Yes, we did see some outperformance of stocks versus the monetary expansion, 63% to be exact. But a lot of that outperformance might also get corrected very quickly, because on the very grand scheme of things, the Shiller PE ratio, so the price to earnings ratio of stocks, is at historical heights. And if that was to suddenly fall to say 20, right, if the AI bubble was to burst, then very likely after a crash like this, the S&P 500 just goes in line with US money expansion. In other words, the majority of the gains that we get in the stock market is just the money devaluing over time. So since the Bitcoin supply is only marginally expanding per year, right, 0.85%, that's currently the inflation rate of Bitcoin, and since the rate at which Bitcoin gets lost might even be higher than that, we should at least expect an annual growth rate that's equal to the monetary debasement. And so now at least we've established a corridor, right? At most, Bitcoin will go up by 55% per annum. That's if we don't have any bear markets. At minimum, minimum, Bitcoin will go up by 6.8% per annum. That's how quickly the monetary base is devaluing. So somewhere between 6.8 and 55%, that's our long-term growth rate. But let's refine this further. The problem with estimating Bitcoin's growth rate from here is that in the beginning, it tended to be much quicker than it is right now. It's a concept called diminishing returns, and it makes sense when Bitcoin is many hundreds of billions of dollars worth. It's much harder to grow it further compared to when it's just a few millions in market cap. But even if we accept diminishing returns, how do we approach this? Should we connect all the bottoms and take this as our growth rate? Or should we connect all the tops and then take only this as growth rate? If you connect the tops, it seems like the returns are diminishing much quicker compared to when we connect the bottoms. And even if we take those approaches, we still have an implicit assumption baked into our growth estimation. And that assumption is that we do not see something like .com or something like the global financial crisis again. Because Bitcoin started generating first usable prices in 2010. It was launched in 2009 at the height of the global financial crisis. And since then, we really never saw a real correction in the stock market. What we see at the top, that's the Nasdaq 100 relative to US money supply. So how are technology stocks doing? We've never really seen a crisis during Bitcoin's lifetime. The only thing we saw was the COVID crash, but the COVID crash was really just a little blip. The Nasdaq 100 dropped by a bit over 30%, and Bitcoin during that time, it dropped by 50%. So that's an assumption we have to make. It's very hard to estimate what Bitcoin will do during a real crisis, right? If suddenly AI stocks were to deflate, if suddenly technology stocks were to underperform the monetary base by more than 80%, then all bets are off, right? Then Bitcoin might crash to a degree that nobody ever expected. By the way, if this is not your very first time watching this channel, then feel free to subscribe over here. I publish videos regularly, and when you're subscribed, YouTube is more likely to recommend the videos of this channel again. But yeah, let's work with the assumption that the global collapse is not around the corner, but let's also find a way to estimate those diminishing returns. Because the problem is, again, volatility, right? Bitcoin can crash by more than 80% over here, or by more than 70% over here. So it's really the long-term return. Where should we put our beginning and our end point? What's really realistic? To solve this problem of volatility and to solve this problem of taking the wrong beginning and end point in this analysis, I like to look not just at the current price, but I like to look at the average price of the entire market. Now that's called the realized price, and the realized price can only be calculated in crypto. There's no such thing in traditional finance, because in traditional finance we cannot track every single portfolio. We don't know who bought what stock at what kind of price. But in Bitcoin and in crypto, we can do that. And that's then what we get, right? The realized price, the average cost basis of the market. And that's much less volatile than the price. It does not go up and down with that much volatility. It tends to just long-term go up. Now let's still be conservative, right? Let's look at the realized price, but let's take the points where we've just finished a rally and let's see how quickly the realized price is growing over the longer term. Let's take a point over here, the beginning of 2018 to today, and see how quickly did Bitcoin grow over those 8 years. When we take those data points, we get an answer that's very high, more than 40% per annum. Now we can also be a bit more pessimistic. We can just take the recent growth and then see how quickly was that. So we move here from 20K 4.5 years ago to our current realized price level of 56K. Then we get a growth rate of 26% per annum. And now we're getting closer to what I think is a reasonable long-term estimation for Bitcoin's price appreciation. We are including crypto-specific bear markets in here. We are not including the total collapse of the system, of course. But 26% seems reasonable. Now, there is not just the realized price. There's also something that's even less volatile, and that's the long-term holder realized price. So what's the average cost basis of a long-term holder for for Bitcoin. And this is a long-term analysis, right? If we buy into an asset and we just hold it for the long term, maybe we buy a little bit every month and we use this as a savings plan. How quickly will that savings plan appreciate over the next 5 or 10 years? Again, it seems a bit like a step function, as in the long-term holders sometimes take profit at the height of a bull market. But then we also have our sideways movements for a while. Let's start off with 2 cycles again. So we look at 7 years of growth. We go from $4,400 to a realized price of $37,000. We get an annual growth rate of 35%. Let's take the more recent past, so after the profit taking in 2020 and 2021, the last 4 years of growth, that compounds to 23%. So it does seem like the growth rates diminish, right? From the realized price, we get 40 or 26%. From the long-term holder realized price, we get 35 or 23%. It does appear as if the price hovers around those average cost bases over the long term. So of course, in the very worst case, we might fall all the way down to that realized price, which is 36.7K. I wouldn't hold my breath though, right? This is just one of many models. This is not necessarily the best market timing model, but there's definitely the possibility that we will see the 56K in Bitcoin. I'm currently not too much exposed to the market. You might have noticed how I've changed also the name of this channel, right? From Gerhard to Bearhard. I don't have a crystal ball. I'm just a random guy on YouTube, but this is simply how I interpret the data, how I allocate my personal wealth. And so my most realistic estimate of how quickly crypto will grow, and Bitcoin tends to outperform most other assets, it's around 25% per annum. That means that Bitcoin will double roughly every 3 years. Of course, there's a lot of volatility. Of course, we could also go down by 50% to the realized price, potentially even by 60-70% to the long-term holder realized price. But if we forget about all of that volatility, if we just buy now and we hold it over the next 5 to 10 years, I think on average a doubling every 3 years is rather likely. So the best long-term growth rate prediction, I believe, is around 25% per annum. That means that an asset doubles roughly every 3 years. That means in 6 years we will have 4x. That means in 9 years we will have roughly 8x from the current price. Could we reach $1 million in Bitcoin in 10 years? Potentially, but again, right, it seems like the market hovers around the realized price. So I think it's best just to look at that in terms of price prediction. If we make a long-term estimate of Bitcoin's price, then we would have double of our long-term holder equilibrium in 3 years, which is slightly below our current price. In 6 years, so at the end of 2031, we'd be at 146. And in 9 years, at the end of 2034, we'd have the equilibrium at 293K. Now, this does not mean the top of a bull market cycle, right? This is just the equilibrium. The price temporarily can very easily be 3 times above that. So in 9 to 10 years, we could hit the $1 million mark. But at that time, that would very likely be an inflated price where people consider taking profit. And again, we are assuming in all of that there's no major .com or global financial crisis kind of crash, which is not the strongest assumption for the next 3 years, but it is a quite strong assumption for the next 10 years. Those kind of corrections can happen over the course of 10 years, right? This is the S&P 500 relative to US money supply. We have been in a constant bull market for 17 years now. And the longest bull market we saw prior to our current run was 18 years in length. So I'm not trying to pretend to know where things are headed. I'm simply just showing the data, what I think is most realistic given certain scenarios, right? If we don't see any crisis at all in crypto, we're likely going up by 50%. If we do have our crypto crisis, we're probably going up by 25%. If we see something like the AI bubble suddenly deflating, then all bets are off. Then I don't know how to calculate this because we've never seen this during Bitcoin's lifetime. Now, talk is cheap. It's easy to make YouTube videos say that the price will 10x or that we're going to see a crash. But really what matters is what's the long-term performance. Are those people publishing on YouTube actually outperforming the market? You might have noticed that the majority of YouTubers never share their numbers. They never say how much they've outperformed a benchmark. They never say how much better they performed relative to Bitcoin, relative to the S&P 500. But I do believe that this channel is different. I do share my numbers, at least the relative numbers. This is my net worth over the last 4 years. So this is a monthly chart. And of course, it does include dollar cost averaging. It does include saving from active income. But here's my trading portfolio, the line in black, relative to if I had just dollar cost averaged into Bitcoin. And this is really in the end what matters, right? Does your trading activity outperform the benchmark? Most altcoins tend to underperform Bitcoin most of the time, and you're able to achieve that performance over several years, and you're probably on the right track. There is a lot of volatility in returns though. This is the alpha, positive and negative, versus buying and holding Bitcoin for each single month. The dotted line over here, that's the 12-month average. So on average over the entire time frame, the alpha is 1.6% per month. Do you see any other YouTubers sharing those kinds of numbers? Most YouTubers just say that you should buy this coin or you should buy that coin. But the problem is, especially the smaller altcoins, they tend to underperform massively. This is the performance of some smaller altcoins over the course of the last year. Many of them went down by 70%, by 80%, even by 90%. And so chances are you did not outperform Bitcoin if you just followed that advice. Chances are you've lost 50, 60, 70%. Now, nobody can know for certain where a price is going. Nobody has a crystal ball, but we can play the probabilities. Some assets are more likely to go up, other assets are less likely to go up. And when it's about probabilities, we simply use statistics. I've optimized various backtests, checking out the best leverage ratios, checking out the best systematic trading rules that actually do outperform just buying and holding Bitcoin over the years. And so for everybody that's done with this kind of crypto advice that ends in losses anyways, I have made some videos, some tutorial videos that actually build skill. I'm also running exclusive Q&A sessions every now and then. You can ask me your questions directly in a live stream. And then if you want to dive deeper, you can also get into the individual trades. I share all of my trades directly as well in real time. So looking very much forward to seeing you in the premium membership. The link to premium pops up here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. See you next time on YouTube or see you in premium. Cheers.